Hey, good morning, everybody. Welcome to another edition of Mike's Daily Market Report. Today is Friday, and I hope you guys have a wonderful upcoming weekend here. And it's June 8th. We just got a couple very little mild economic news releases scheduled for today. Nothing that real important, but we'll go ahead and cover it. We got the trade deficit for April. We had 52.6 billion in the hole for March, and we figured it would kind of reduce down to about 48 billion. And it came down a little bit, but not quite to 48 level. So we came in at a negative 50.1 billion in trade deficit here. And then the other item to note is wholesale inventories for April. In March, we had a 0.3% increase, and for April, it jumped up to 0.6%. So decent. Those are kind of semi-important because what that shows is that businesses are stocking up for anticipated business or increase in business. So they're feeling a little bit more comfortable. That's why they're wholesale. We're stocking up a little bit more. So we'll jump over to the headline news right now. And the stock market has been a little mixed today. It's been kind of up and down a little bit. Sometimes they're all up a little bit, and then sometimes, like the Dow and the Nasdaq, I think it was down a little bit as well. So it's been kind of mixed a little bit this morning. And another item is Europe. More signs of Europe slowing down. Basically, Europe are Italy's productivity or their manufacturing slowed down, and then Germany's looks like their exports were slowed. So their economic news have kind of shown some, unfortunately, slowing down effects there. So it looks like, as a lot of people thought, there it looks like they could be going into recession now, or if maybe they are in one. China also cut rates yesterday, so that's the first time they've done that in quite a few years. So that kind of indicates as to where the global economy is looking at. So that's creating a little bit of concerns as well. So with all that in mind, we're going to bolt ahead here and look at the bond market. We had a 15 basis point increase, so we had an opening gap. So we're down currently about 3 basis points, but we did end the day yesterday on a positive note, so that's a good sign. And we are in the 105 range. But at some point, again, if you followed me, we always close these gaps up like we did right over here when we had that big gap here that closed the following day. And we still have this one at some point. This one may come later on. It may not be dramatically now. In the immediate future, could be a month away or so, because these are pretty strong supports right here, these floors right here. So we'll go ahead and call it. But rates are better today, even though you see a little negative here, because the basis of where the position of the bond market here is. So interest rates are a little bit better today versus where we were yesterday. And of course, we had a rate improvement yesterday because we did jump up a little bit. So right now we're testing the ceiling. But again, this will probably at some point close up, but we'll see where it lands by end of the day here. Have a wonderful weekend. See you on Monday. And don't forget, stop by Mike's Daily Market Report. Subscribe. Have a wonderful weekend.